Five biggest stocks market crashes. Every time it seems like we are out of the financial crisis, we face another. Remember back in 2008 when the housing bubble burst? Millions of the people lost their jobs, homes, and everything else. The European Union spent the next 5 years trying to recover. In fact, countries such as Greece just recently recovered from the 2008 crisis, and yet here we are in the middle of another crisis. But if you watch this video, you will you know that the crisis is opportunity to build a fortune. All we have take a look into the some of them in previous videos. But to take advantage of the crisis, you need to be able to spot them before everyone else. Those and get yourself ready to that we will do in this video. We will take a look at the 5 greatest financial crises in the modern history to understand why they happened, how they happened, and how did we recover from them. So let's start with the first one, the panic in the 1907. The United States wasn't always such a great financial power. Back in the 90s, it was a country of the turmoil. The Civil War almost destroyed the country, and its financial market wasn't working properly. The US didn't even have the central bank to manage financial crises, as many European countries did back then. To understand the importance of the central bank, just imagine the Fed didn't exist today during the current crisis. The only reasons the stocks market surged back is that the Fed injected a ton of the capital into it. Unemployment rose to an all-time high, but the Fed gave the government the ability to distribute stimulus checks. If not the Fed, the current crisis would have been much worse. In the 1906, one of the famous bankers wanted to make a fortune by the purchasing United Cooper shares to rise and force short sellers to buy his shares to exist their positions. But his plan backfired as the short sellers found a different source to buy United Copper shares. That move bankrupted the company and multiple other banks. As the news bankruptcy spread, depositors rushed to their banks to withdraw to their savings. As the banks ran out of the cash, they stopped lending money to their depositors and went bankrupt one after another. The stock market crashed to an all-the-time low. There wasn't central bank back then to restore depositors' faith in the banks, so the Wall Street turned to JP Morgan. He deposited a significant chunk of his wealth into some of these banks to restore panic faith in the banking systems and convinced other wealthy bankers to do the same and save the economy from the sliding into the crisis that God knows how long it would last. Second, the dot-com bubble. The internet has become such an important aspect of our lives that it's difficult to imagine that 20 years ago the internet wasn't even a thing. In the 1990s, where the golden era to start the online company Amazon, Yahoo, PayPal, eBay, Google were developed during the period, one people who understood the extent of the internet knew that the internet is going to revolutionize the world. Everyone wanted to take advantage out of his gold rush, so investors threw their money at every company that had .com at the end of his name. Everyone knew that most of these companies aren't going to survive, but one success would not only compare to all their failures, but would pay back enormously. And that's happened. In just 25 years, Amazon went from the nothing to a $1.7 trillion company. But the overflow of the cash into the tech companies pushed stocks prices way higher than they were. Companies that barely knew that they were valued at the hundreds of the millions of dollars. The Nasdaq index market rose by the 400% in just 5 years. By the mind 2000s, the bubble began to burst. The stocks of the internet companies start plummet. By 2001, most internet companies had to declare bankruptcy. The stocks market had lost 5 trillion in the market capitalization. Since the peak, the Nasdaq was down by 78%. The Great Depression, it's often called the greatest inflation crisis in the history of the United States because it lasted 10 years and crashed the entire economy. The American leadership tried everything to save the economy, but nothing worked out. Every solution proved to be ineffective in the face of such crisis. When World War I broke up, the entire Europe countries was at war, but the war slowly spread to the rest of the world. Everyone was eager to win, but unfortunately, supplies were limited, especially food. So the Allies turned to the United States for help since it was directly affected by the war and had the economic power to provide that. So the US became the one major supplier. Wars by no means are good, but it brought the period of the economic prosperity to the United States. If you were even a farmer, you could produce as much as wheat as you can and sell it at the highest prices. Even though the war has ended by the 1918, the demand for the American goods, especially wheat, didn't fall because the entire world was still recovering. Farmers began taking huge loans to buy more land and equip to farm more wheat, which led to real estate prices to increase. That purchased people to buy even more lands, hoping they'll sell it later for the higher prices. The same thing was happening to every other industry. Stock prices were dramatically rising. Even foreign countries and companies started investing in the US. I guess you can already see the flow. Many companies were overpriced because of excessive demands. In fact, most of them investments were based on the speculations. Nonetheless, that didn't stop the people from the investing. When Europeans recovered, the demand for the American goods, especially wheat, fell since other countries started farming as well. The oversupply drove prices down and pushed the stock market to fall. Everyone started selling their shares to cash out before the stock market plummets further. But that's crashed the market even more. Since wheat prices started falling, farmers couldn't pay back their debts to the bank. So that pressured the banks since everyone was asking back for their deposit. The panic has already spread to the entire country. Banks couldn't pay their obligations and had to shut down one after another. In just 10 months, 744 banks failed. In 2008, housing bubble. Do you like real estate? Probably yes. So does everyone else. In 2000s, investors were looking to a better return into their money. The stock market just crashed, and US Treasury bonds offering on the low rates of the return. So investors turned to the real estates. But big investors don't want to deal with the individual buyers. Tenants are the pain to the ass. I can say that from my experience in the real estate. So banks took all of these mortgage, bundled them together, and sold them to investors in the forms of the shares. Investors were probably confident because worst cases scenario, if the borrowers would default on their loans, the bank will take the houses and sell it since home prices were rising. When banks realized that there is such huge demand, banks spread giving mortgage to the people with the really low credit score. Why? Because they would take these mortgage bundles them together and sell them to investors. Low interest rates and rising homes prices keep attracting more investors. But then one borrowed defaulted, so his house was put on sale. Then the second defaulted, and the third. Soon there were so many houses back to the sale that home prices started falling. That scared off investors, so they stopped buying these mortgage securities. Lenders who created mortgage securities were left with a lot of the worthless securities, which made home prices decrease further to the point where financial institutions had to declare bankruptcy, such as Lehman Brothers. AIG, the company that provided insurance for this mortgage, soon collapsed since it provided so many insurance without having the money to back them up. The market crisis crashed the financial industry, which almost went to the collapse of the entire economy if the Federal Reserve didn't intervene and bail out of the big banks. The COVID crash. The current crisis is so big that the 10, 20, or 100% from now, people will be reading in the history books about how the entire world economy crashed overnight because an unexpected virus. For most people, the pandemic seems more the science fiction movie, but what happens back in the March is truly historical. The crash was the fastest fall in the global stocks market and financial history, and the most devastating crash since the Great Depression in the 1929. After a decade-long prosperity, overnight 38 million people had to appeal for unemployment benefits. To the US, GDP fell by 5%. The stock market crashed by the 50%, but that didn't last close since the injections of the cash by the Fed quickly brought back the investors to the stock market. However, despite that, it will take us to live a few years to completely recover from this economic crisis. It's the nature of the economy to crash. When the economy is rising, everyone jumps into earn more, which leads to the price to increase faster than they suppose, which leads to a bubble. And the bubble is burst sooner or later. If you have enjoyed this video, make sure you give it a thumbs up, and if you are new around here, subscribe and turn on notifications. Thanks for watching, and until next time.